This is Money Matters. The shilling has this week touched its lowest point against the dollar in history. While this has far-reaching ramifications for the wider economy, this week we explore what it means to the banking industry and the users of the banking services. But that's for a little later. Examining the impact of pegging Africa's infrastructure development on minerals, X-ray diagnosis and dangers associated with taking it from unregulated providers, and tips on how to build a juice-making business within your means. This week on View from the Top, we look at the state of Uganda's banking industry amidst the current market realities, and most importantly, the fast depreciation of the Ugandan shilling against the dollar.
Very nice to have you on the show. Money Matters. You're welcome.
Thank you very much.
Very good. Now, I know you head one of the financial institutions in Uganda, that is GT Bank. Yes. Just briefly give us a bit of background. I mean, who are you as GT Bank and how have you found the market in Uganda so far?
Thank you very much. Guarantee Trust Bank, we are first a financial services group that is headquartered in Nigeria. We're a leading bank in Nigeria. We've just made a foray to East Africa, whilst we've been in West Africa, in all English-speaking West Africa so far, and we have also started going into the Francophone West African countries. We are already in Côte d'Ivoire, apart from the English-speaking West African country. We're quoted on the Nigeria Stock Exchange. We're also quoted on the London Main Stock Exchange.
In Uganda, small and medium enterprises have been identified to be the engine of growth for this economy. But we've seen a number of players in the financial industry, or banks, if you like. Well, they've failed to really reach out to this particular segment. What is your game plan in that particular area? Is it one of the areas, for instance, you're interested in?
Yeah, for us, we are here to serve all the business segments that are available. Our business focus is in the corporate, the commercial, the SME, the retail, and even part of the public sector business. We have that as part of our focus. We're paying special attention to the SMEs. We're paying special attention to the young entrepreneurs. Yes. I'm sure the issue you're raising is the fact that it's a bit difficult for that segment to access support from the bank. What we've done is that we have profiled our own customers. We have products that we're going to be using to drive our entrance into this market, and we believe we'll be able to make gain substantial grant in very near future.
Okay. If you look at the Ugandan market, what do you think are those aspects or segments that you think will drive growth in the banking industry?
Well, growth, like you mentioned, the SMEs, the mass market, they're going to drive the growth. Don't also forget that in Uganda, oil has been a front burner issue in recent times. Oil has been discovered in commercial quantity. Oil drives growth, as we've seen in most economies where oil is the driver of such economies. And I believe that that's going to be it's going to give a major leap to the economy of Uganda. The GDP is going to grow in bands, and supporting the young entrepreneurs, supporting the retail business, supporting the commercial business. I believe those will be the direction that the economy will go in the near future.
Of late, we've seen the shilling losing very good ground against the dollar, touching the lowest point in history, so to speak. What is this development? What does it mean to the borrowers on one side, but then also to you people who are lending the money or keeping the money on the other side?
The devaluation takes up the price of commodities. Don't forget that a lot of Uganda is essentially an importing country, and what it means is that you have a lot of Ugandan shillings now chasing the same, a lot more Ugandan shillings chasing the same goods that could have been acquired for less in the recent past. And what it means to to the banking industry these days. If you are borrowed in foreign currencies, for instance, and your sales is done in the local currency, you have to sell so much before you are able to pay back. So it's also a pointer to the fact that there can be default in loan repayment, and also for savers, as you have mentioned. If you are a saver and you are saving in the local currency, the interest that you get on your savings cannot compensate for the devaluation that is currently going on. So, in essence, you've lost value. For lenders, which we are, it calls for some caution in the kind of lending that we do, and to the kind of currency also of our lending. Say, for instance, most borrower in this economy who want to borrow in the foreign currency, in the US dollar specifically. And why do they want to do that? Because the rate on US dollar is significantly lower than borrowing in Uganda shillings. So borrowing in US dollars, you have to be careful and ensure that the source of repayment also is coming from receivables in US dollar or in a foreign currency, so that you can match like with like.
Thank you very much. It's been nice talking to you.
Thank you very much.
Thank you.
International investments for African debt targeted at infrastructure projects hit $8.5 billion in 2014. And that's according to the latest edition of the African report. But concern is now building up to the fact that virtually all these debt levels are tied to Africa's lucrative resources, such as oil and gas and related minerals.
Africa's vast resources ranging from oil, gold, iron ore, diamonds, among others, are part of the items attracting international investment for debt sourced in the continent.
I'm going to Poland in about a week and a half, and there we have about 10 of the largest Polish investors in Africa. I'm taking my people there. Okay. We opened it in Stratton. We opened that path. We are talking about any one of those investing about $1 billion in Africa. But you have to participate in that money.
It's within that spirit that the Uganda Chamber of Mines and Petroleum is looking towards the proposal by government to ensure local content in the oil and gas sector is structured.
We would like these minerals not just to be exploited by foreigners, but we want Ugandans to be. And there is a deliberate law now put in oil and gas, where Ugandans are reserved 48% of whatever services or licenses you are giving. And I think the minister is signing the regulations this week. So this will open the way for Ugandans to participate in the natural resources that they have.
Citing countries such as Gabon, Angola, Tanzania, Ghana, and Nigeria, whose local content development fund has clocked $350 million, experts argue that space for Ugandans must be widened.
And that can only be achieved if the local content policies and intentions, or the local content strategies of the oil companies, are linked in with the long-term plan of government and the long-term achievement targets that you would want to visit upon the business community that is going to, in effect, ensure the social economic transformation of the areas in which we are operating.
Announcing a new round of licensing for 6 oil and gas exploration zones 3 weeks ago, Energy Minister Irene Muloni urged for joint ventures with multinational firms.
So government is striving to ensure that this resource that belongs to all of us actually creates lasting value. We all benefit from it.
Besides core business opportunities in areas such as supplies to foreign companies, strengthening of local capacity in specialized areas are also seen as critical.
What you want is that by the time we come to that point where we no longer need a massive employment drive to have all these people in the industry, you have built sufficient sustainable capacity within the social economic infrastructure of an area to live long after that, to even feed into other extractive industries.
That said, even with the basket of oil and mineral resources, the current exposure of African economies to huge international debts, close to $10 billion last year alone, remains a point of worry.
You have at one time or another visited the hospital or on some occasions subjected to x-rays or CT scans for diagnosis. But little did you know that this equipment, if not up to standard, can actually damage your health as opposed to helping it. How this happens and the way it can be avoided is our focus this week on this segment.
X-ray machines are a constant feature of larger hospitals and serve a need, yet unknown to many. With the use they serve comes danger too for the users due to the radiation technology.
When you are exposed to radiation, it can damage you. It can damage body tissues, it can damage your health. Sometimes it is a slow death issue, okay? Even the public, you might go for treatment and you come back again with the what? When you are more severe than how you went inside.
Sometimes the dangers are worsened by the operators of the X-rays and other radiation technologies.
The radiographers don't meet the required standards because we have a few radiographers in the country. We have very few medical physicists. They are less than 10, if I'm not mistaken, in the country who are very qualified. So you find that they employ non-qualified people to work in these facilities.
And according to the regulators, the problem of hospitals failing to adhere to the standards required for their equipment boils down to ignorance and at times even negligence.
The major problem is that majority of these facilities are just starting in the country. They are not aware of the international requirements. So we are enforcing those, which are reflected in the Act and the regulations, because it is based on the International Atomic Energy Agency requirements. For example, you should have warning signs, you should have protective gear, you should have all safety measures have to be in place. There are specific safety measures which we include in their reports. So if they don't, initially we come and inspect you, we give you the requirements and recommendations. We give you 3 months to work on them. But these facilities, we have inspected them twice in the last 2 years. They are silent.
So the next time you're unfortunate enough to find yourself in a health facility and have to be exposed to radiation equipment, you should keep it at the back of your mind that if not properly administered, your life may be at risk.
How do you make homemade juice in such a way that you take on a profile of a cottage industry player? On Your Money, we examine what your needs will be and the amount of money required to make this happen.
Today, it's about how to start yourself up, making industrial scale juice, but perhaps best at your home. We shall use pineapple juice making for today.
Wash with hot water to remove any contamination, and citric acid is not dangerous because it is also an acid found in the fruits already. We have a knife which is already washed with citric acid. We chop the pineapples. After chopping, we cut it small pieces. Make sure you cut in small pieces so that it is easy to blend and you get all the juice extracted out of this fruit. After chopping the pieces of a pineapple, you put them in the blender.
Then you blend without adding anything, not even water.
After that, we go to the process of sieving. The materials we are using, the utensils we are using are easy to get. They are on market. You can get them from Chikubo or any other market that is nearby. So these things are not very expensive to come by.
It's important to measure the amount of juice you have after the sieving.
If I bought pineapples of 40,000, how many liters am I going to get? And what profit am I going to get out of it?
Then you must boil the pineapple juice up to 80 degrees centigrade, which is why you must have a thermometer to make sure of that. There are requirements which are a must before you start.
That you need to have, first of all, a blender. you need the boiling can, you need a thermometer, you need the sieve, and other basic requirements like cans. If your total discounts to around 400,000 for you to gather the materials for starting the business. Of course, you need other things like the charcoal stove and all that.
The business needs to have some guiding financial projections.
On average, you buy like about 5 kilograms, which may cost you about 40,000 shillings. And from that, you are able to, if you are efficient and you use the blender well, you are able to get up to 10 liters of juice. And each liter, as you heard from the entrepreneur, goes approximately for 12,000. That means you are getting about 120,000. But if you bring other costs like transportation, the citric acid, the charcoal, and other small things, you can round it up to about 30,000. So that means you are spending about 70,000 for the 120,000 shillings that you are going to get. So that's a profit of 50,000.
Uganda Investment Authority trains groups in juice making, among other cottage, home-based business ventures.
And now a look at the latest in the financial markets. That's it this week on Money Matters. My name is Malcolm Sime. Thank you for viewing. And in case you want to get back to us, text us on 6565. You can also look for NTV Money Matters on Facebook. Until next time, greetings from me and the team. Cheers.